Accounting 1, we are going to go over journal entries today. If you go into Blackboard and you print off a sample of typical journal entries that you will see in Chapter 2. Of course, I have included every single type of transaction, but I feel that I've exposed you to a majority of what you will see in Chapter 2. Okay, so journal entries are the first step in an accounting cycle. These will be completed in a general journal. You will learn that you will analyze each transaction and you will have one side either debited or credited. Now, you can have more than 2 accounts on each transaction. However, your debits always have to equal your credits. Okay, so let's go through this. All right, so the first transaction, and I'm going to list it by numbers, is number 1. So number 1 on June 1st, so I put the date, 6/1. The name of the company is computer consulting business called Clay Consultants. So the owner of the business, it's going to be a corporation, invested $50,000 cash and equipment worth $31,000 to start his computer consulting business. The business in turn issued common stock to him. The owner took money out of its own personal assets and put it into the business. We don't care about the owner's personal assets. We work for the business, so we will debit cash. Cash is the first account affected. Cash is an asset. So we're going to debit that. Let's see, what else did he do? He invested equipment. I'm also going to debit equipment. And that is $31,000. So I list my debits first. Remember that when you work in the lab. And then my credit, I'm going to indent a little bit. And then the credit will be common stock. And I will total these 2 accounts, which will be $81,000. This is an example of a compound entry. You have 2 debits that total up to $81,000 and 1 credit. Both sides have to equal. Okay, remember last week when I talked to you about debit and credit? And I said you have to know debit and credit cold. Remember, we talked about the 5 main elements. Asset. How do you increase an asset? Debit. What's the normal balance? Debit. Remember, the normal balance is always the side you increase the account with. Also remember, I told you last week, only know the debit side. Only know the increase side. When you know the increase side, you will always know the normal balance, and then the other side is always the opposite. So let's test that. How do you increase an asset? Debit. What's the normal balance? Debit. How do you decrease an asset? Credit. Let's go to liability. How do you increase a liability? Credit. What's the normal balance of a liability? Credit. How do you decrease a liability? Opposite, you would debit. How do you increase equity? Credit. How do you decrease equity? Debit. What's the normal balance? Credit. Revenue. How do you increase? Credit. Normal balance is a credit. How do you decrease revenue? Debit. How do you increase an expense? Debit. You got it. Normal balance, and then the other side is always the opposite. Okay, so let's move on. So now we're going to number 2. So number 2 is purchased 10 computers for $35,000 cash. Okay, so the 2 accounts affected are computer equipment. That would be classified as an asset. What's happening to a computer equipment? It's increasing. You paid cash. Think about your own cash. When you pay cash, right? Cash is going down. So I go over and I put 6/2 and I debit computer equipment. I look, how much did they pay? They paid $35,000. And then I credit cash, $35,000. Okay? When you're first learning and when you're working in your notebook before you work in the lab, remember I talked to you about that. Work from the book first in your notebook before you go to the lab. That way it gives you twice the practice. Draw a line down the middle in your notebook so you can clearly separate debit and credit. Also, I am not going to provide explanations. I'm not going to write that. I'll run out of room. But when you work in the lab, some of them will make you do the explanations. Just choose the drop-down window. This one you would say, purchase computer equipment for cash. That's the explanation. Okay, now we go to the next one. Number 3. Purchased office furniture, $10,000. So the total was $10,000, paid $5,000 cash, and the remainder on credit. This is another example of a compound entry. My debits have to equal my credits. Okay, so I looked twice on this. All right, so I purchased office furniture, and that's also on 6/2. You can have transactions on the first day, same day, of course. It's a business. Purchased office furniture, so I'm going to debit office furniture. Office furniture is an asset. It's going up. That's $10,000. And then I look, they paid $5,000 cash. Think about your own cash. You pay cash, it's going to go down, right? All right, so now I indent that because cash is an asset. When I decrease cash, I'm going to credit. So I credit cash, $5,000. Okay, and then it says the remainder on credit. Now, it didn't say associated with a note payable. If it doesn't, then that will be accounts payable. Okay, so I'll go through notes payable at the very end. Most often, notes payable will be when you borrow money from a bank. It could be, though, if you purchased a long-term asset. And later on, I'll teach you how to compute interest. Not yet. Okay, so now I credit accounts payable. $5,000. Okay, let's see if this makes sense. My furniture is going up. Furniture is an asset. I debited that. I paid cash. My cash is going down. Cash is an asset. I credited that. Accounts payable is classified as a liability. How do you increase a liability? Credit. That makes sense. My liability is increasing until I pay that down. Okay? All right. So now I'm going to try to fit this next one. Number 4, purchase supplies on credit. And I will erase because I will run out of room. All right, so purchase supplies on credit. 2 accounts are affected, are supplies. And when you hear the word purchased on credit, well, I haven't paid cash yet. So what will that be? I need to tell myself I need to pay for it. So I debit supplies and credit accounts payable. Debit supplies, and what's the date of that? 6/4. I debit supplies, and whatever the amount is, 1,000, and then I credit accounts payable. $1,000. Let's stop. Let's see if this makes sense. My supplies account is an asset. That's increasing. I just purchased more supplies. I'll use them later on. Not yet. We'll see what happens. I credit accounts payable. Accounts payable is a liability. What's happening? That's increasing as well. You'll see eventually I'll pay that down. How do you increase a liability? You credit. So that makes sense. All right, so I'm going to erase now, okay, so I can show you more types of transactions, okay? All right, so I left off with supplies, which was number 4. Now I'm on number 5. Again, I put the date, 6/6. Here's what it says. I paid $2,000 for a 1-year insurance policy. All right, what's that? What happened was on 6/6, they paid for an insurance policy in advance. They paid for the entire thing for the whole year, okay? All right, so that's an example of a prepayment. Prepaid insurance. You prepaid before you used it. So what do? You go over here, 6/6, you would debit prepaid insurance. How much? $2,000. And it just says paid. So you're first learning accounting. When you hear the word paid, if they don't say anything about on account or on credit, that's cash. So you're going to debit prepaid insurance and you're going to credit cash. Always list your debits first. Also, when you work in the lab, don't forget to put in your commas or the lab will mark you wrong. So put in that comma. All right, so, and also, again, you probably will have the explanations. You would just say prepaid insurance, okay? All right, go to the next one. Number 6. Completed a $4,000 project for a client who must pay in 60 days. All right, 6/16. Okay, I look to see why is this gentleman in business. He's a computer consultant. He completed a $4,000 project for a client who must pay in 60 days. Well, one side is revenue to that person. The other side is it's going to be built, so they have not paid cash yet. So how do you tell your business that you need to receive money? You're going to call it accounts receivable. So let's put the accounts. You would debit accounts receivable. Okay, and that is $4,000. And you would credit service revenue. $4,000. Let's see if this makes sense. Accounts receivable is classified as an asset. You're increasing that account. How do you increase an asset? You debit. That's telling this business that they need to go back out and make sure they get that money. Service revenue. How do you increase service revenue? Yes, that person has earned the revenue. You credit that account. Okay? Later on, you're going to see they will collect all or some of that money. Okay? All right, now we go to number 7. And we have 625. 625. Paid $450 for this month's utility bill. Well, a utility bill for a company just like us is an expense. And it says they paid. So that means the other side is cash. Let's put the two accounts. Utilities, expense. You will debit $450 and you'll credit cash $450. Let's stop, make sure it makes sense. Utilities expense, it's increasing. How do you increase an expense? You debit. you're going to see that expenses decrease net income. We're not talking about that right now. We're talking about debit and credit. How do you increase an expense? You debit. How do you decrease cash? Well, what's cash classified as? An asset. How do you decrease it? You credit. Makes sense. All right, now we're going to go to number 8. 6/26 is the date. Completed services for a client and immediately received $20,000 in cash. Completed services for a client. One side is revenue. Immediately received cash. The other side is cash. They received cash. That means cash is going up. Cash is an asset. You're going to debit cash. So I go over, I debit cash. How much was that? $20,000. And then I credit service revenue. $20,000. Okay? Does this make sense? Absolutely. Okay? Now this one is different than this one. Here's why. This one, the provided services and the customer is going to pay at a later time. Or it could say something like provide services on account. That means they have not received cash yet. This one, they received cash, they're done with that transaction. Okay? All right, so now I'm going to try to squeeze it. I'm on number 9. I go to number 9, it says 6/27. Clay Consulting paid dividends of $4,000 cash. Remember last week we talked about dividends, but in case you forgot, dividends are paid out to stockholders. So stockholders own stock in a company, and these particular investors are receiving cash dividends. The dividends account is a contra equity account. Remember we talked about contra accounts. It's always the opposite of the regular equity. So a contra equity you will increase with a debit. So I go over here and I debit dividends. Dividends for $4,000 cash. I debit. And then I credit cash, $4,000. Okay? All right, so now I'm going to erase. There's the dividends. Let's erase and let's finish this. Okay, let's see. Number 10. The date is 6/28. Paid $2,000 of accounts payable created in transaction number 3. All right. This is when I wish I still had it up, but I couldn't fit it. Okay, so we'll go back to number 3. Everybody look at your notes. What do? We purchased office furniture for $10,000. We paid $5,000 cash and placed the remainder on credit. So we had credited accounts payable for $5,000 at that time. Everybody look at your transactions. Okay? All right, now we're going to pay $2,000. We're not paying it all off. We're only paying some of it. Okay? All right, so you will debit accounts payable. And then you'll credit cash, $2,000. Okay, let's stop. Let's make sure it makes sense. Everybody awake? Come on, we're almost done. All right, so accounts payable is a liability. How do you decrease it? You debit. Makes sense because you're decreasing your debt. You're just like us. We pay down our debt, decrease it, right? All right. In order to pay down the debt, you're paying cash. That's decreasing cash. So everything makes sense. Accounts payable is a liability. Cash is an asset. Makes total sense. All right, so now we go to Number 11. Here's number 11, 629. We see $4,000 for the services previously performed in number 6. Okay, so we go back to number 6. Okay, we completed a project for a customer. The customer is going to pay in 60 days. Well, they didn't pay us all. They paid some of it. We had an accounts receivable on the books. So now we're going to take some of that accounts receivable off the books. Okay? All right. So, no. Oh, they paid for it all. Okay, so we see $4,000 for services previously performed in number 6. Okay, so 629. They paid us all. Life is good. All right, so we debit cash, $4,000, and we credit accounts receivable, $4,000. My dog just came in the room. I don't know if you heard it, but okay. So, does it make sense? Cash is increasing. We debit that. Cash is an asset. How do you increase an asset? Debit. Accounts receivable. That's classified as an asset. You're receiving the money now. You want to decrease that accounts receivable. Otherwise, you're going to go back after the customers and they're going to say, hey, I paid you. So what do? Decrease that. All right. Now we're to number 12. Almost done. 630. They borrowed $30,000 from the bank and they signed a note payable. A note payable is affected when you borrow money from a bank. Okay? So note payable is also classified as a liability, just like accounts payable, but later on we'll learn what happens with notes payable. But right now, you would just debit cash, $30,000, and you would credit note payable. That's it. Okay, again, stop. Make sure it makes sense. Okay, cash is increasing. You're borrowing money. That's increasing your cash, $30,000. That's an asset. Note payable is a liability. You're also increasing your debt when you borrow money. How do you increase a liability? You credit. Okay? All right, so those are typical examples of journal entries. Just remember that when you work in the lab, just think about the accounts. Remember, I'm leaving you. You have to know debit and credit by heart. Okay? Don't fight those rules. Don't make them hard. Know the 5 main elements and know how you increase and decrease every account and what the normal balance is. Okay? All right, good luck in the lab.